We've got lots to discuss, but let's start with the credit losses. You've said that the 2020 credit losses could swell to $7 to $11 billion. How robust is that guidance at the moment, given the uncertainty around how bad the impact of coronavirus could be?
There is obviously a great degree of uncertainty around that range. We saw $3 billion of expected credit losses in the first quarter. That was up fourfold on the charge in Q4 of last year. The 7 to 11 range is an estimate on what we can see today. Very, very dependent on, the path, duration, and economic impact of the coronavirus during the remainder of the year.
Ewen, good morning to you. It's Manus. To avoid that worst case scenario, Ewen, up around the 10s and the 11s, what needs to go right for yourself and Noel to avoid the worst case scenario?
I think what we need to see is the start, we're already seeing it in China and Hong Kong, the start of a recovery out of the coronavirus in terms of the harsher economic impacts. We still think that Europe and the US is going to go through a very difficult second quarter, and I think it'll depend very much on the degree of recovery that we see into the third and fourth quarter later this year.
Ewen, we also understand that the credit losses included a significant charge in Singapore, where HSBC has been on the hook for a $600 million loan to a failed oil trader. Can you give us more of an update on that in terms of recovery, or how much more that could impact credit losses?
We have taken a very substantive charge into the Q1 results, into the Q1 provision as a result of a single name exposure that we have in the sector in Singapore. We're not going to go into details, though, on individual customers and provisions that we've taken.
Ewen, what are the institutional shareholders more peeved about? The fact that your dividend is suspended, and that was the regulator pushed you for that, or is it that your cost-cutting program is delayed?
Okay, we regret the fact that we had to cut the Q4 dividend, and we've also suspended dividends for the first 3 quarters of this year. We want to get back to a position of being able to pay dividends as soon as we can, but we're going to pause on any decision on dividends until we get much greater clarity on the path and impact of COVID-19 on the business. On the cost-cutting program, while we have paused our
dividends off the agenda for 2020? Ewen, before we take a quick commercial break, are dividends off the agenda for 2020?
I think we're going to take that decision at the back end of the year or immediately ahead of our full-year results early next year, Manus.
You talked about a recovery in Hong Kong and China. People come on the show and they say 70%, 80% recovery in the economy, back to normal. What can you tell me? Is lending going up? How would you define and qualify the recovery in China and Hong Kong?
It's early days, but you can see factories reopening, people getting back to work, all of the statistics improving in mainland China and to a lesser extent Hong Kong. I think progressively coming out of lockdown in both economies. I mean, I think the real call, Manus, will be the demand side, particularly given what is likely to be a fairly significant recessionary event in Europe and the US in the second quarter. But certainly in mainland China and Hong Kong, we are beginning to see early signs of a recovery.
Ewen, the big transformation plan that you announced in February, your CEO, Noel Quinn, has said this morning that the restructuring will resume once the virus passes. But can you give us any guidance on how you're expecting savings to come from other measures apart from job cuts, which have been put on pause?
Well, we're doing all the things that we should do to control our cost base, and we've signalled today that we now expect, having told the market at the beginning of the year that we expected costs to be flat this year, that we now expect them to be down. We reduced costs year on year by 3% in the quarter. We're going through all of the variable cost line items, such as travel and entertainment, marketing and the like. We've drastically cut back on external recruiting, given that we've paused our redundancy program. And where we can do work on the restructuring plan, we are doing that work. But we did feel it was appropriate in this environment to put a pause on redundancies.
So you and the magic number, according to the people at BI.
Sorry, Mattis.
Does that mean you'll keep a larger presence in areas identified for exit previously?
Let me finish, which is the $4.5 billion, the $4.5 billion of cost cuts that the market wanted to see from you to deliver a positive jaws. Are you going to be able to deliver $1 billion this year, $3 billion? Is positive jaws going to come more quickly, perhaps, than we anticipate, even in this tough time?
Well, I think on the cost side, I think we will be able to make more progress than we had previously envisaged at full year. On the revenue side, I think it's much more difficult to predict the path of revenues in this environment. We certainly expect revenues to be down this year, and we haven't committed as a result of that to positive jaws. What we have committed to today is to see our cost base lower than last year.